So you think closing on a house in the next 90 days is impossible? Even with today's elevated rates, these 5 steps are going to help you lock in financing, win your offer, and move in and not regret the purchase after. In this video, I'm going to show you the exact mortgage strategy I use daily and pre-approve my clients, and all the tips I give them, and all the market insights that you need to know to close fast and avoid costly mistakes. So my name is Eric Hamilton. I'm a top 1% lender in the country. I focus on data-driven analytics to help consumers and realtors make informed decisions. I've spent over 20 years in the business helping thousands of families build wealth through real estate. So why does this topic matter? Because many think that homeownership in as quick as 90 days is not possible. So step number one is obvious, but we're going to go a little bit deeper, and that's getting pre-approved, but more importantly, getting your finances in order. So a pre-approval letter and a commitment letter is your strongest negotiation chip and provides certainty to sellers. So let's talk about. So a pre-approval is great. That is when you submit all of your application information to a lender and use, the financial information, whatever stated on the application, and that is what a pre-approval is. We're going to try to take that a step further, and we are going to do a commitment letter. A commitment letter takes all of that same information and provides a level of certainty by verifying all of the paperwork, all of your income, all of your assets, and the more work you do up front, the better prepared you're going to be and the less surprises you're going to see along the way. So one of the things we don't talk about a lot is kind of the secret behind getting pre-approved and maybe avoiding some of the issues down the line and what you should do before getting pre-approved. And that's really just a quick finance checkup. So you always want to review your credit card bills, okay, and go through, any of your credit card balances and look at if you have some extra funds, does it make sense to pay down some of your credit card debt? One of the examples that I give for someone I just spoke with earlier today is they had a $10,000 credit card balance with almost a $230 monthly payment. Well, that monthly payment, $230, okay, is going to be way better served being paid off with that $10,000 and lowering the down payment by $10,000, because $10,000 in your down payment is about $50 a month. Credit card $230. That's the minimum payment. That's going to be there for years at a much higher interest rate. So financing cleanup up front is really important, okay? The other thing that we talk a lot about in the early stages is, do you have any opportunity to cancel or pause any unused subscriptions? I work with a program, and we do this a lot with buyers. And, I have a couple people that have $300 or $400 in subscriptions they weren't even aware of or forgot about or don't use anymore. Really important to take inventory of those and get rid of them. And then to document a lot of recurring expenses that maybe don't show up on your expense report, maybe they're memberships, health club memberships, things like that. Can you make any decisions there that will help you out? So it's important to remember that buyers with a pre-approval, okay, close about 30% faster than ones who do not. That's a stat from NAR last year. So again, really important. And 67% of sellers review a buyer that's pre-approved and has a commitment letter much more credible. Again, another NAR stat. So, I have a situation I'm working with a borrower of mine. She cleaned up all of her credit. She got her pre-approval done, commitment letter in 10 days, and, we were closed in under 30 days. So 90 days is doable. It's just about the work that you do up front and how you get prepared before you start the process up front. So step number 2 that I always want to focus on is defining your budget and, more importantly, your priorities. So, monthly payment, if you watch any of my videos, I talk about this a lot. It's the first thing I talk about with a lot of my buyers, is more important than purchase price. So you want to decide on a target monthly payment that you're comfortable with before touring homes. And the reason why I say before touring homes, once you start looking at homes, okay, it becomes very emotional, okay? And what I mean is you're going to justify in your head why that monthly payment is fine, and you want to make decisions that are not emotional. So defining your budget up front and your priorities up front are extremely important, okay? 74% of first-time buyers who stretched beyond their budget later regret it. Buyers who lock in target payments ahead are 50% less likely to cancel that contract. One of the things that I see a lot is people get caught off guard because they fall in love with a house, they get the paperwork and the payments way higher than what they expected. So a lot of those contract fallouts that you hear are more so because there wasn't enough work done up front. Now, one of the things that I always tell people is when they say, how much am I approved up for? Doesn't really matter. That amount is going to be way more typically than what you want to pay. Every month you get a statement. That statement is going to have your monthly payment on it. It doesn't have your purchase price. It doesn't have the type of home, how many bedrooms. It has the mortgage payment. And that's going to be a steady reminder every single month, okay, if that payment works for you or if it causes you a lot of stress. You want to put yourself and create a lifestyle and a comfort level that's going to be able to allow you to live your life, okay? Maybe putting down less and having reserves will provide you that comfort level if you have to go higher. So instead of putting $50,000 down, maybe you put 30 and you put that 20 in an account just in case something were to happen. One of the mistakes I see a lot of people is taking all of their savings and putting it down. Okay. So the other thing you can do as a secret, which I see a lot of people doing nowadays, is if you say $3,500 is going to be your comfort level, maybe for the next 6 months, put $3,500 a month in your savings account. See how that feels. You're saving money, you're not spending it. And instead of going to your mortgage payment, you're just preparing for that mortgage down the line. So something that's really important to do. Step 3 is assembling your team. Really important. The right realtor, the right mortgage lender is going to make all the difference. Not every outcome is going to be the same with who you work with. It's probably the biggest thing that I see every single day. Real estate agent is going to understand the local inventory, the comps that are available out there, what is the correct price you should pay, but then more importantly, have the negotiation expertise to help you win that offer. Not every outcome is going to be the same with every single realtor. Okay, your mortgage lender is going to help you with loan structure, rate locks, underwriting, understanding your options, going through monthly payment, going through cash to close, being able to close on time, helping you win that offer, be available. And then you're also going to have an attorney that's going to be able to identify issues, renegotiation, any issues with possession, post-close possession, all those things. Your team is going to be your advocate. And you should meet with them before looking at homes to know and understand what their experience level is, okay? Do they have an online presence? If they don't, is that a red flag? Do they have reviews? I've even had people ask to talk to some of my past customers, which I think is amazing. I think it's a great thing to do. So all of those things matter. Rushing to get approved and taking on a team with no preparation, and this happens every single day, okay? It's going to be a recipe most likely for something that is going to be an outcome that you're not prepared for. So it's really, really important to take some time and to work on that up front. Step 4 is understanding inventory to make a better offer, okay? So inventory right now is about 25% below 2019 levels in many markets. That's a national stat, okay? Now, this is the important thing to note. National inventory right now is up 32.8% year over year, okay? But still 14.6% lower than in 2018, okay? So the first quarter of 2025, active inventory, okay, shows that 11 states have inventory today that is over 2019. 26 states have lower inventory and still considered a seller's market, okay? And the rest are flat to even. Why is this important, okay? You need to know and understand inventory in the market that you're going into to understand where future home prices are going. Now, why is that important? Because if you're in a market like in my market, in the county that I'm recording this video, our inventory is about 77% below where it was in 2019. We have multiple offers well over list price. And it makes sense because we have so little inventory to choose from and we have way more buyers than we do homes for sale. Now, I do a lot of work in South Florida. And South Florida, they're above where they were in 2019. They're negotiating, seller credits, lower sales prices. two completely different markets. So you want to know and understand those differences before you make an offer, okay? You also want to understand, contingency dates, okay? And am I waiving any contingencies? I keep seeing borrowers waive contingencies and have no idea what they're waiving. Rate locks, that strategy. Understand all of that to make a better offer. Also understand what appraisal contingencies you're going to do and cover if the appraisal comes in lower, and if that will be a responsibility. You got to ask your lender and your realtor what is being written into the contract. We have a lot of success with borrowers who are placing a offer on a home and they're going over list price. And when we go through the data and we go through tools that show them what the home will be worth 6 months, a year from now, 2 years from now, based on average appreciation over the last 50, 60 years, it makes them more educated and willing to move forward. So very, very important dynamic to know and understand, okay? Now, step 5 is one that I am very passionate about, and I keep doing a lot of videos on, and it's something that I think is really important for a lot of people to understand, is understanding the why, not just the how. You have to understand why a loan strategy fits your long-term goals and saves you money and prevents regrets. So much of what we absorb on social media is how to buy a home. These are the 10 steps. These are the 5 steps. The real question that most consumers are looking for is the why. Why do I need to buy now and not wait? Why are home prices still moving higher? Why do I need to buy in this location and not here? Why is inventory so low today in this market, but yet so high in this market? Okay. 73% of homeowners have at least one regret about their home purchase, and that's up 10% from last year. 62% of buyers regret loan choice within 2 years. So that's, lack of understanding the why, or lack of understanding the why they did the strategy that they did. Okay. So again, why do you buy today versus waiting? Those are the questions that you want to ask. Why are home prices still rising? Understand the why will not only avoid regret, but it will also help you come to terms with the fact that buying now may not be the right time. We have conversations every day when we go through that we say, you know what, this is not the right time to purchase. That is the benefit of understanding the why and not just the how. When you're just focused on how to do something, you're not getting at the root of your specific situation. And it's very important to understand that. So let's summarize and create a quick action plan. So, 5 steps to buy a home in the next 90 days. Number 1, get your pre-approval and get your finances in order. Very, very important. Number 2, understand your budget and your priorities. Okay, so monthly payment and where we want to be at monthly payment. Number 3 is assemble your team. Okay, really, really important. Number 4 is understanding inventory, awareness of inventory, and creating a good offer strategy that's going to help you win and not have any regrets later. And a lot of clarity around why you're offering what you are. Okay. And then lastly, understand your why. Why you want to buy now, why you don't want to wait, why inventory. Understand that. Okay. So if you'd like to have a one-on-one consultation, click the link below. Schedule time with me and my team. We have consultations in the evenings, weekends, early mornings. We do this every day. And again, we may come to terms with the fact that it's not a good time to buy it, but at least you're making that decision with a level of clarity and education that's going to allow you to be ready when the time is right. Educate yourself on, how to opt into our 90-day home buying bootcamp email series. Okay, you can click the link below for that. So the neat thing about that is we'll send you an email once a week with how to get ready and what the process looks like, and it'll help educate yourself and be ready along the way. We don't spam you. It's strictly just value so you can look. And anytime you want to raise your hand, you can just reply to one of the emails. So it's a great way to get some information in your mailbox once a week. So please like and subscribe. If you like this video, please like and subscribe. Help more buyers find strategies like this. You can drop your question in the comments. You can also book a one-on-one strategy call with me and my team. There's a link in there. And again, we look forward to the opportunity. And if you have any questions, just let us know.